This
Okay,
conference will now be recorded.
we are ready for the midterm week. This is over week 7 and 8. So you actually have nearly 2 full weeks to complete both parts of the midterm. The midterm will be given in 2 sections. The first section does require a proctor. Most of you will want to do this at your local Ivy Tech proctoring center where it's free. You just need to make an appointment. Hopefully you've done that already. The appointments, especially during the midterm week and finals week, always go fast. And if they show that there's no appointments, that's simply because you waited too long. And then you may have to do paid items like Proctor U. If you do decide to do Proctor U, I have to know ahead of time because I have to send them forms to allow you to do that so they'll know how to instruct you. But the best way is just to take it at your local Ivy Tech campus. You'll have a full week 7 and then including the weekend, and then week 8 up through, I recommend no later than Thursday of week 8. I give you up to Saturday, but if you try to do it those last 2 days and something happens, there is no makeup for anybody that waits till the last minute. That's just your incentive to do it early. To go ahead and schedule an appointment, if you haven't done it before, here are the easy steps. Just follow these 3 steps here and you should be able to make an appointment online. Again, I sure hope this has already been done. The part 1 of the midterm will be very similar to what we do in class each week. Actually, both parts are going to be very similar to what we do each week. I try to keep it so that's the least amount of variables to think about. It's already hard enough to have an exam. So I try to make it very similar to what we're used to. To even help you more, I do allow you 1 page of notes front and back, and I put that on the proctoring form so the proctor will know and allow you to have that page of notes. When you get into the proctoring center, they will enter in the password that I have provided, and then you'll be able to access the exam. I believe the exam is about 50 questions, give or take. There's a couple extra credits as well in there to help boost your grade. I do have to enter in the extra credits manually. They will not figure into your grade as soon as you're done. I have to go back in and do those separate. For part 2 of the midterm, it is preparing a tax return like what we've done in class so far with just the different examples. It's where I'm going to provide you all the information along with the tax actual documents like the W-2s or the 1099 dividend form, all those type of normal documents. Then you're going to prepare the return and then answer the questions like we have normally done in class through in your normal homework. Part 1 needs to be done by Saturday. That's the last day. That's the day before spring break. That's when spring break basically starts, that Saturday. So it needs to be done by then, and then I give you that till the end of the weekend for part 2. The reason I do this on Saturday is because most of the proctoring centers are closed on Sunday. So just to make sure everybody is on the same page, we do it on Saturday, the deadline. Again, no makeups. You need to schedule early to get a time slot. Those time slots do go fast that midterm and finals week. Okay, let's get into the actual review. So you'll have a good idea of what to expect and maybe what to have on your notes. I've updated this link here is again very similar to what I put out at the beginning of week 2, and it's also in the syllabus. This takes you right to, and let's go ahead and go into it. This takes you to the VITA site and gives you all kinds of good practice. Here it is. So things that you would want to focus on are the Affordable Care Act, the filing statuses, dependents, who can you claim as a dependent, what's income, what's not. You can look through Social Security. It's not as important because just knowing what Social Security is, where does it go in the 1040. The adjustments to the income, what are the adjustments, what is not, what is a standard deduction. Basically anything in here in the basic menu is items that you should know for the return or for the exam, the midterm. So I would go through different ones of these and read through the slides, take the practice little test and see how you do. So the first part is, and actually the first two here are going to be very similar to what we did in week 2 when I gave you a whole bunch of scenarios and you had to decide which filing status is the individual going to use and how many dependents can that individual claim as a qualifying child or as a qualifying relative. I also have the spiral pages, I call them. They're in the resources at the very top of when you click on modules, the resources are the very first thing that pop up. These spiral pages go in great detail about who can be claimed as a qualifying child or a qualifying relative. I would highly recommend really studying those 4 or 5, whatever that is, pages that go along with that. So we'll have examples like this, and you'll need to know how to answer them. Tom lives with his friend all year, Randy, and Randy's not related. Randy is disabled and receives $10,000 in Social Security. They estimate that Tom pays for 60% of Randy's expenses. How should Tom file, and how many exemptions can he claim? Well, Tom has to file single. I can know that right away. The only time you can claim head of household is when you actually have a blood relative with you, or your mom or dad, you pay for their housing. They're the only ones that is allowed to live outside of your home, but as long as you pay for over half the cost of their upkeep. But in this case, we would be able to claim Randy. It would be assumed that none of his $10,000 in Social Security is taxable, so he would have 0 in taxable income. And we provide over half of his expenses, and he lives with us all year. Therefore, we could count Randy as a qualifying relative in this situation, assuming all the other regular tests would be met, meaning he's a U.S. citizen, those kind of items. So again, I highly, highly recommend going through these spiral pages. These are from the VITA notes that I get every year. I would pay attention to those. All right, standard deductions and the additional standard deduction. Make sure you have an idea of what they're real easy to memorize. Remember the 12,000 for single, and for married filing separate. Head of household is 18, 24,000 for married filing joint and surviving spouse. And the additional standard deduction, this one's the one that's a little bit more difficult. The additional standard deduction, remember, that's only for you or your spouse. No one else that you claim as a dependent can you claim an additional standard deduction. And the additional standard deduction, I don't expect you to memorize the amounts. I will give you those. You just need to know who can have them and what kind of, don't want to say ailments, but that's the best thing I can come up with. What are the 2 situations that trigger an additional standard deduction? And that would be being 65 and older or being blind. And then you get to add for every one of those you are, or your spouse. You could have it 4 additional amounts added onto your standard deduction if both you and your spouse were over 65 and blind. Itemized deductions, lots of areas in this one number here. Make sure you have an idea of what are considered itemized deductions and what are not. What's the threshold for things like medical expenses? How much in medical expenses do you have to have in order to be able to claim even the first dollar as an itemized deduction? What's the limit on those state and local taxes? You can only claim so much a year. The charity, what percentage are you capped at of your AGI? What about gambling losses? Are you allowed to take gambling losses, and if so, how much? And then some of the not very common items, but things like casualty and theft losses. Remember, those can only be done in a federal disaster area. And then items that are no longer itemized deductions are those that are considered miscellaneous, subject to 2% of your AGI. These would include things like unreimbursed employee expenses, or using your own home as your office as an employee of a corporation. This is different than having your own business and having your own home office. This is having your own home office in lieu of actually going into your corporate or your main job. Instead of going in, you have dedicated a small office in your house. You can no longer deduct any of those expenses as an employee. So what's considered income and what's not? Make sure you have all of those primary items from the 1040, especially items 1 through 5, and then what goes on all the schedules. So I'm going to put that as number 6 here. Know all 5 schedules, and then especially the ones we use in class. So the ones we use in class are the numbers 1, 3, and 4. Numbers 1, 3, and 4 are the ones that we're gonna that we have used so far in class, and that we're not going to use 2 and 5. I mean, it may show up on one return or here or there, but most likely they won't. Okay. What kind of interest and where does it go if it's taxable or non-taxable? The dividends, the difference between ordinary and qualified dividends. How are they taxed differently? And be able to maybe provide an example of a qualified, what makes something a qualified dividend? And then once it's dedicated as a qualified dividend, how does that affect the tax that's due? Alimony or divorce settlements, I'm not going to really touch on this a lot, but just have an idea that alimony is taxable, or you can write it off if you pay alimony, as long as it was before 2018, as long as your divorce was finalized. You can still pay it up until 2018, 2019, that's fine, you can still deduct it. It's just if the divorce was issued after the with 2018 or after, then you cannot deduct it. Know what these forms are. I think it's important that if you ever go into a job and they say, we've got a 1099-R or a 1098-E, you should be able to know what those forms are. Otherwise, you're going to be way behind everybody else. You've got to have at least some of these basic forms memorized. So the other one here was, I'm going to put this in here, the 1099-R, I think. And the only reason I don't have this one, I didn't have it on here necessarily just because we're going to talk more about retirement after the midterm as well. But it's one that we have at least seen. Know what is an adjustment for AGI, from AGI, and then credits. Okay, so for AGI, adjustments would be all of those items on Schedule 1, things like student loan interest, money that's put into an IRA, all of those Schedule 1. Deductions from AGI would be your itemized deductions, so medical expenses, state and local taxes paid, charity. And then what items are considered credits? And then finally, what items are nothing at all? Paying federal income tax. That doesn't go anywhere on the return. You don't get a deduction for the amount that you paid on your federal income tax. Or paying credit card interest. That's nowhere on the return. Make sure you can give an example of a refundable versus a non-refundable credit. Which one is which? And remember, there are 3 primary refundable credits, and they're all listed right there on the 1040 on line 17. They are the earned income credit, the additional child tax credit, and the American Opportunity Tax Credit. That's for the education expenses. Know who can take the American Opportunity Credit and the Lifetime Learning Credit. What are some of the basics of both? How is the tax calculated on each of them? Or the, not the tax, but the amount of credit calculated. So go back through in week 6 and review those 2 items, especially who can claim it and how much can you claim depending on the amount of eligible expenses that you have. So if I would say you had $3,000 in eligible expenses for the American Opportunity Credit, how much of the $3,000 could you take? Okay, the basics for the child tax credit and the credit for other dependents. Remember, this one is at $2,000, and that's for a qualifying child of yours. And remember the age limit, they have to be 16 and under. Once you hit 17, you no longer get this. Then they would have to switch over to this one. Even if they're a qualifying child, you could still get a credit for other dependents, but this one is not nearly as much. It's only $500. And this one is not refundable, whereas this one could be partially refundable. Remember, it's up to 70% you could get as an additional child tax credit. Basics of the child and dependent care credit. So what are the age limits that you can still have and have somebody babysit your kids? Remember the work rules, both spouses, if married, have to be working, or if one is in school, you get to count $250 per kid, up to 2 kids. So you could, if you have 2 kids, it could be $500, and that's per month that you're in school full time. Otherwise, your dependent care expenses have to be the same or less than the lower spouse's income. So you can't just have somebody working, one person, and the other person stay at home and not make any money and then still use the child and dependent care credit. It doesn't work like that. And then the Affordable Care Act, the Obamacare, who has to have insurance? What is the penalty for 2018 and beyond if you don't have insurance? Kind of know some of the basics of that. And what are some of the exceptions to not having insurance? So go back, this is mainly, we covered this in week 1. So you may want to go back and review some of that. Now, as we come down through, we're gonna go through some of these examples and see how you do. What I would highly recommend is pausing after we talk about each one and then trying to solve it, and then see if you get the same answer as I come up with. All right, so for this first one, the gross income, I want you to tell me what is the gross income. So as we go through, we're gonna yes or no, and then add up all the yeses basically. So wages, of course, yep, that is. Qualified dividends, yep, those are considered gross income. They're taxed differently, but they still are gross income. We got a gift of a new car, nope, we can mark that one out. Prize on the Price is Right, we got a vacation valued at $3,000, yes, that is gross income. Regular dividends, yep, we have to count those as well. Interest on a corporate investment, so that would be interest on some kind of a bond perhaps, and yep, we count that. Municipal bond interest, no, that is not part of gross income, but we would still have it on the return, just not part of gross income. Scholarship for tuition, as long as it was all used for tuition and it doesn't say otherwise, that would be no, so no for both of those. Workman's comp, that would be a no. We do not have to pay tax on the amount of money we receive after getting injured at work. However, unemployment is a yes. We do have to record unemployment. And then the one weird one that I can't remember exactly talking about, maybe I should have taken this one out, but I have it in here, so we'll talk about it. A stock loss, you can only take up to $3,000 of a stock loss against regular income. Remember when we talked about way back in week 2, the different types of income? There were active income, there was portfolio income, and then passive income. This would be considered portfolio. So you can deduct gain and losses within the same category. But once we have it netted to 8,000 in this case, we have to stop, and then we can only take 3,000 off of any of the income we would have added up. So that would be a negative 3,000. At that point, then you could add up all the yeses that we talked about minus this 3,000 to determine the gross income. All right, let's look at this next item here. This one is, you may want to, you can actually, maybe these next two, go through these next two and then determine, are we allowed to deduct, yes or no? And then I tell us here, let's take the including the self out. I'm going to go ahead and take that out. We're going to put here how many dependents can we claim. I think that'll be a better. I'll make sure I have that updated in the midterm. So how many dependents can be claimed? What's the filing status? Can we take the child tax credit? And can we take the EIC? All right, so hit pause, go through these two, and we'll see how you do. Okay, so Brenda, when she lives with her unemployed boyfriend, Tom, definitely not related, we hope, who has 2 kids. So Tom has 2 kids, and Tom lives on disability. Disability is not taxed. Kids are 11 and 13. They do not pay for over half their support. Brenda pays over half of Tom's support and his kids. Tom does not need to file. So what we have to, let's determine here how many dependents she can claim. So first off, this is one of those examples where she can actually claim Tom and his 2 kids because Tom does not need to file. She can claim his 2 qualifying children, because remember the main rule is if kids are considered a qualifying child of someone, then somebody else that's not considered a qualifying child, they cannot take them as a qualifying relative. However, in this case, they are not considered, or this is one of those exceptions. So she can actually claim Tom and the 2 kids. However, for our filing status, she cannot claim head of household because no one is related. So she has to claim single. The child tax credit, nope, can't do that. Those are only for your qualifying children, and these are not her children, so therefore she cannot claim the child tax credit. Same with the EIC as we come down here. As you can see, she doesn't get to claim the EIC because, again, they have to be a qualifying relative, or no, excuse me, a qualifying child, and they are not considered a qualifying child for either of these 2. However, if we did add one more, when I say a dependent, we would be able to claim the credit for other dependents. So she would get 3 of those at $500 each. That's the benefit of claiming the dependents. Okay, the second one here, Joe lives with his kid who's 8. It's his kid the entire year, and his girlfriend who earns $7,000 part-time, and she is on Social Security disability. Joe pays over half the support of both the child and his girlfriend's support. Joe has an AGI of 33,000. Okay, so hopefully you've already gone through this one as well. The key with this one is the girlfriend makes over the gross income threshold. Therefore, he cannot claim her. He would only be able to claim his child, his 8-year-old kid. So dependents, yes, he can claim 1. Filing status, he can claim head of household because it is a relative of his that he's claiming as it is his son, his kid. Child tax credit, yep, we can take that, and we would be able to take the earned income credit as we are within the thresholds for both. So the girlfriend should file on her own. She should claim herself because no one else can. Okay, let's look at this last one here. Mary is a full-time college student eligible for the American Opportunity Tax Credit. She pays $3,000 in loans. I just go ahead and tell us that. We don't have to figure it up. And she lives with her parents, and they claim her. So her filing status would have to be single. Can she claim herself? Nope, can't claim herself. Can she claim the education credit? And the answer is, again, no. If the parents can and do claim her, even if they just can, she cannot claim the education credit. All right, let's go ahead and pause and go ahead and do this last one and try to decide what the answer is. We're going to, again, take off the self. All right. So Stephanie lives with her 3-year-old son for 4 months of the year, and the child lives with the father for 8. Stephanie, her father, paid for over half the child's support. Per the separation agreement, this year, Stephanie gets to claim the child as a dependent. All right. So, do we get to claim the dependent? Yep, we sure do. Do we get to claim the filing status? What filing status do we get? We cannot claim head of household because we do not have the child for over half the year at our house. So we do have to file a single. Child tax credit, yes, we can claim that because it is our year to claim the child as a dependent. The EIC, can I claim the earned income credit? And the answer is no. You can only claim the EIC if the child lived with you for over half the year. The father would be able to claim EIC, and the father would be able to claim head of household as well. All right, our last item to review, we're going to simply explain if it's an above the line, below the line, basically meaning an itemized deduction, a credit, or no deduction or credit. So take a few minutes, hit pause, go through these, and let's see how you do. Federal tax deduction. So you had to pay money for your federal taxes. Where do you get to deduct that? The answer is nowhere. You don't get a deduction or a credit for that. Child care, so the parent can work. Yep, that's fine. That is considered a credit. Child independent care credit. EIC, that's considered a credit. Alimony paid, that would be an above the line deduction to AGI. Child support received, no deduction or credit. I should actually put child support paid. That would make more sense here. Still the same answer, no deduction or credit. Unreimbursed job expenses, this is no longer allowed. No deduction or credit. This used to be an itemized deduction, but it is no longer for the years 2018 and beyond. Home mortgage interest, yes, this is a below the line deduction. This is an itemized deduction on Schedule A. Credit card interest, nope, can't deduct that anywhere. 3 hours of CPA tax work that we donated our time. And the answer is no, cannot deduct time as a charity contribution. All right, along with the IRS site that I had provided, the Vitus site, and then also using the spiral pages, you should be able to do well on this exam. Go back and review some of the prior questions in the text. But if you can answer most of these, I think you'll do fine. What I consider fine is at least over a 75 or an 80% on the test with the extra credit that I will add on. Okay, and good luck, and then we'll come back week 9 with retirement income.